Hey guys, All in Crypto here, and welcome back everybody for another YouTube video. Today we've got a very special guest coming back once again on the show. We've got Mr. Francis Hunt, ladies and gentlemen, the market sniper, the crypto sniper, and last but certainly not least, the reset sniper. Welcome back on, Francis.
Delighted to be with you. Thank you for having me.
It's a pleasure. There's so much going on. It's always really important to have somebody who's such a good critical thinker around markets as yourself on the show to kind of help us navigate a little bit of what's going on. You know, we're having the dollar pullback. We're seeing the crypto market have huge contagion with FTX and everything that's taking place. The stock market is rallying. Maybe we can make a little bit of a sense of all this and kind of paint the picture for the viewers in this video.
Oh, absolutely. We can try go through the entrails. At the end of the day, all we can do is an on balance of probabilities, what's likely to be happening and what's our best take. In fact, I just finished a lengthy macro take for the premium community around why I actually think there could be some bigger inflection points having just taken place. So it's been a hurly-burly month for me. I was involved in travel. I was leaving one major area where I'd spent a substantial period, arriving in another, cleared closets, lots of stuff bought and packing. And by the time Monday came, I couldn't withdraw my money out of FTX. And I took a 7-digit bath. And there were some people, I actually saw the biggest client creditor was 267 odd million. So I can't cry too much, but it's a substantial liquidity dump that we took. And then there was all the people saying, well, you were in exchanges, you deserve it, da 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 da. There's some Bitcoin maxis in there. And our responses to that is largely actually crypto main success has not been as a spending alternative for money. It has not been as a store of value. You've gone from 69,000 down to 15 at one point, and you're mid 16s. That's over a 75% bath almost. And Bitcoin has actually gone down less than many of the others. It's too high a beta. It's actually been it's basically been a speculator's paradise for technical analysis and trading, and it's served us rather well. But of course, counterparty risk is something else, and it's a different kind of stop loss. And we got caught with that one. I thought he would survive because he had that veneer of Zuckerberg about him, the new Zuckerberg, and they seem to have been, he was getting unbelievably soft PR, and he was getting access to a number of high profile people. So I felt that there was a cultivation and enablement going on around him. But and I think that's still true, but the enablement was to get our confidence and to actually rug pull us all, not to create another, localized leader a la Bezos, a la Zuckerberg, a la garage. They love these garage to billionaire entrepreneur narratives. That doesn't even apply even for Steve Jobs, never mind Bill Gates or any of these others. They've all been enabled to varying degrees. So that's the backdrop of what we've come into. And at the same time, your dollar long dominance trades. And when you travel, it's always hard. I had multiple travel days, and I arrived. I was in the wrong country. We had to cross a border to do a non-farm payroll in a hotel. As I say, it was just perfectly timed for a major pivot in the dollar and a counterparty risk. So the minute you travel, and I'm actually consider myself a very lucky man, by the way, by all measures, I'm an exceedingly lucky man, but that just was it. And that's the challenge you get. And you only get those kind of challenges if you're big enough to cope with them. That doesn't mean I haven't had a long face for a while and felt somewhat sorry for myself. But the point of the matter is, if you get, and this is hardly the challenge of Gandhi and Nelson Mandela either, by the way, but it is a big challenge. You only get them because you can handle them. That's the mental framing you should have, which is ironic. Remind me to take you past that stoicism mention that we were discussing pre-hand. But anyway, so the long and short of this is I've had for the first time to sit down and re-look at a bunch of charts. And the first things actually I went past is actually to highlight that every major inversion, this is kind of really technical. So for a lot of people, this might be a hard listen. So I'll be quick and brisk with it, but it's incredibly incredibly seminal for what's coming. And I don't think it's changed anything on that front. What's coming is a dark, deep, violent recession that will probably depression. I don't think we do normal recessions. And the thing I'm talking about is yield curve inversions. So essentially, very simple explanation, again, for those that aren't familiar, is it's basically 100% call, and it's a leading indicator. I always stress, have a look at things that lead, that tell you what's likely on balance of probabilities to come. Lagging indicators are no use. That's driving the road. Everyone says that about technical analysis. They're wrong. They're focusing on indicators that are mathematical formula, that are lag on manipulated and lagging data. Patterns are potential probabilities of the future. And so in the same way, the inversions are actually telling us we're going into a major demand killing event, which is quite likely to include either green lockdowns, monkeypox lockdowns, some concocted narrative. I can see from the way I'm being treated on my YouTube channel that they remain excessively sensitive to discussions around mosquito bite injuries, post-mosquito bite, if you know what I mean when I say that phrase. The man-made variety. So, there's all sorts of takedown materials. So I'll not do the same to your channel, and that'll be the phraseology I'll use from then on. But the key thing is there's definitely something coming, and it's probably like most things manufactured. In other words, there's insiders that know. And I can't help but keep thinking that I always get a wisdom and an insight before. So I was visiting Ukraine 7 or 8 times prior to the eventual Maidan attacks. That was 2014. And I saw how I could no longer change pounds for dollars long before the engineered events occurred. And of course, there was a monopoly of money lender in the airport who was the guy who was kept Grivna, which is the name of the currency, and provided swap my pounds for Grivna. And then the final 2 trips that were just prior to the Maidan Square, they were not keeping that currency anymore. And it was kind of interesting. How did they know? Because if that was such an organic event, how did they know? Very few things are entirely grassroots organic. They are created to appear as grassroots organic, but they're unlikely to have been. So that was a little bit of a microcosm and a long way round of a bit of info. But the point is inversion. What does it mean? Well, it means normally you have the short rate is paying you a lot less. And when you're putting up your money for a long time in a longer debt instrument, which is what your pension does, which is what you can do if you buy an ETF. But most people are not involved in the debt market. You intentionally kept dumb about bonds and said, it's boring stuff. Don't you worry your little head about that. It's probably the most critical market. It affects the FX markets. They overlap and they're vast by size. And the relative differentials in how debt is being treated in one country versus another will drive FX rates. So we've seen that with the yen, for example, that's trying to maintain a 0.25 during the dollar bull cycle when the Americans were tightening. So that interest rate parity saw money go from where it's not treated well to where it's treated best, because it can move. It's like water, it finds the level. So in essence, yield curve inversion is the high rates on the monthly and the 2-month and the 3-month, and actually very low rates on the longer term. Now, normally when you compound interest, you need to pay a higher rate. If you're borrowing long, you need to pay a higher rate because that compounding over a much larger time of inflation is devaluing the return a lot more. So compounding works against the investor, and for the person who's borrowing, debt's valuation gets destroyed. So he's paying you back in diminished money at the end. So the rate typically goes up. So you have a yield curve that the longer you're borrowing for, the price goes up. What we're actually having is an inversion, which means you're getting, one rate on the 1 month, the 3 month, and on the 30-year and the 10-year, that rate is actually lower. Now, the only reason that happens is more people are putting money in on the long end and parking it up and not wanting to be in any other investment. So when lots of people are buying the asset, it pushes the price up, which means the actual yield goes down, because there's an inverse relationship between the yield on the asset. So if you have a contract, you borrowed 100 grand and it's paying 10%, you're getting 10 grand a year. If I rush in and buy it for 200 grand, it's still only paying 10 grand. It's only yielding 5% a year. So the value of the bond has gone up, but the yield is half. So this is a simple explanation. So the inversions is the difference between the short rate and the long rate. And as normally the longer out is higher, what we actually got is that. So that is telling you that the market is preparing for a chronic. They're expecting the Fed potentially in December to come and raise rates again, maybe by half a point, maybe by 0.75, maybe by 0.25 if the stats and the data keeps coming in worse. And again in February. But thereafter, they're actually expecting cuts. So the 10-year is actually falling down on its guesstimated yield. It's dropped below 4% and sitting at about 3.8, and similar for the long term. So in actual fact, they're expecting and anticipating and already pricing in a reversal. So people are locking up money up because the capital appreciation in the long bond will be higher if the yield is lower. So that's basically what yield inversions mean. And they are chronic. Now, the difference, and it's worth showing you this just once with a chart, the amazing thing about it is also when you do this differential, you see the different momentum inside which these things are moving. So when you go through zero, that's an inversion. That means the longer term debt value is lower than the shorter term. And when you take the shorter term's rate away from it, you're getting a negative number. So that's called the inversion point when you go through the zero. Now, when I put up, say, let's do the US 10-year here, and I'm going to share a chart if you'll allow me.
Yep.
When I reduce, take away the, that's the 10-year rates. You can see we're as high as 4.3. We're now technically slipping. Pull it out a little bit and give it.
Just so everybody's aware, this is the yield. So this isn't the actual bond price. This is the yield percent that you're getting on the bonds. So the bonds have obviously had to go down in value and the yields have gone up to entice people in. They're a self-regulating thing. This is fascinating. Yeah, let's continue.
So we were the callers 2 years ago of the debt top in values and said rates are going to go up. And you're at about a 0.23 in our opinion. Don't forget, there were all these narratives of NERP, ZERP, and all of these about how much lower below zero rates would go. And of course, none of these have materialized. So it was quite a brave call at the time. If
I could just also add about that being a brave call, the debt markets have essentially been in a 40-year bull market and the yields have been in a 40-year bear market. So for somebody to call and a 40-year trend-ending event, which was, of course, March 2020. Brave call indeed. This is fascinating and crucial for you guys trying to navigate what's potentially coming around the corner.
100%. And not only was it brave, it was our first time. So you also get a lot of people like the 24-hour clock that will say 8 o'clock twice a day. It was our first time sticking our necks out to say that, and we believe we've been accurate on that. So this is the difference. This is the chart you get when you take the longer term. This isn't the longest debt, it's the 10-year. So that means the 10-year yield minus the 3-month yield. Now, the reason I chose that is because when many people were already questioning the Fed about whether we're in a recession now, because of course the official definition was met, they said, no, that definition no longer holds. Basically, they didn't say it quite like that. They say, no, there's other reasons, employment market strong. I don't think it's a recession. We're going to ignore that now, which is kind of weird because if you define something as a recession when the following criteria are met, if those criteria are met, you should say that's a recession. But they, of course, started tagging ifs and buts and maybes onto that. So our economy is far weaker than we think, but we have the stubbornly high inflation. So they're going to create an extreme demand killing event, aka you, which means you're going to have very little money and you're not going to be able to spend. Now, they did pretty well when they did the original mosquito bite resultant event that saw first the fake malaria and then the need for the mosquito bite to be applied. They did pretty well in demand killing on that. In fact, you saw one of our other calls the call of petrol and energy and oil to drop into single digits the first time in 35 years materialize that. And you saw another one of the other half of that trade, which was a gold precious metals long and an oil short. So you could have done a delta neutral commodity trade. In other words, gone long gold, short the oil, and it wouldn't have mattered if there was a recession and everything went down. The one just had to go down more that you were short. In the end, they both went in the right direction. The gold went up and the oil went down. But gold during the worst moment did also dip for a bit. Anyway, let's not digress too much.
Trade. Yeah, I remember it.
This is an unbelievable. So here are the previous. In fact, I took the 10-year. It would have been almost better if I had the 30-year, because you would have seen the back end of the 80s. There was an inversion there. So it's not something that happens every day. Literally from the 80s, you would have had 1, 2, 3, 4, and we are going into the 5th event. So we're talking early 20s. We've got basically 23, and you probably could have gone back to 85, 86, 87, and you would have had the other one you're not seeing here. But if I bring up the 30-year, we'll see it. But let's just go with this. What you'll notice is it's not just the fact that you went under here in 2001, the dot-com ball. You got your first warning in 99. The same here you got in the beginning of 06. It's still one event. It was the dot-com. But you also got a warning dip just short below here in around 2006 February. Let me just double verify that. You see March, February on the bottom if you're looking at the dates below. And then you went for the real dip over here, which was same year, but the back end of that year, 06. This gave you the early warning of a major, in my opinion, depression that was banking-induced subprime property, which was the asset that they chose to inflate next after they had inflated a fakery dot-com boom, of which only a handful of companies became unicorns, these garage success stories that I was referring to, and the others were all fluff and business plans. Yeah. So the bulk of them. So that was your big move. And the thing is, by the time the recession comes, you're up here already. You know, a Lehman's moment was in the mix over here. So it is a true leading indicator. And there are very few things that give you advance warning. It's also 100% accurate advance warning. So here was your COVID. Actually, you got your first dip through the line, March 19. You got your full dip taking place June through July of 19. And officially the beginning of 20, you got the malaria, and then you got all the pharma companies coming up with the mosquito bite solution. And as a result, the real chronic pain, it was during 20 and 21 that you felt it, because that's where most people were in various versions of lockdown. Now, the key point I'm making here is that the rate of descent here is unparalleled by any other inversion. This isn't something working its way down. You can see here, for example, there was a down leg, there was a rally, another down leg, a rally, another down leg. This is just a straight out puke, almost straight down since the period here, right down to here. And we are carrying so much momentum. We have surpassed what was actually the problem with, my opinion, the repo markets in 2019. Yeah. That was the other interesting part that coincided with this extreme print of money, was we had a major banking failure
based on liquidity
on the repo markets September, October 19, that required instant and emergency support from the Federal Reserve. And in fact, certain banks, including one that is now having a depositor run, Credit Suisse, right now, received trillions, I repeat, from a foreign US bank. We're talking about a Swiss bank getting money from the Federal Reserve, received, I think around Credit Suisse received about 2.3 trillion. Individual Deutsche Bank was mentioned, was in the list, and a number of American bulge banks, Bank of America, Citibank, received trillions. So the American Federal Reserve funded to the tune of around 28 trillion, I think it's, call me a liar, maybe 23 or 28. My eyes were killing me there. And that article can't be found anymore. I think it showed up on Zero Hedge once, archived, gone. Go Google for the trillions that were paid by the Fed to the European and American banks, and you won't be able to find, because I've tried to go get those numbers again, and I regret not screenshotting that article or downloading it. So as a result, and they needed to do that because of the major derivative Ponzi's, I suspect, that were going to blow up, or because of the cash they would need to have for this interest rate cycle that has gone up, given that they all loaded on debt on the way down, and that debt is now all losing value as an asset and requiring higher interest payments as a liability. So imagine your assets are losing value and your liabilities are requiring bigger mortgage payments. It is literally like you kept extending the mortgage on your home, and now the price of the home is going down, and the interest rates on your mortgage, now that you quadrupled it each time it grew bigger, is now going up by multiples of percent. That basically is bankruptcy in most individual sense. So the scale of this descent has surpassed the low of the 2019 event, which essentially was considered the precursor for the biggest globalized shutdown of all small businesses, many people not going to work, and an unparalleled, coordinated, transnational New World Order event, as far as I'm concerned. Of a lab flu that was initially denied to be a lab flu and is now largely accepted to be a man-made created flu. And if you think that was the first time they've ever done it, I've got other history and news for you to learn about and share. Now you have this degree of capitulation that you haven't had. You've surpassed the great financial crisis's low, as well as the 2019, and the dot-com boom, which was very standout as a first of its kind, because you hadn't had major crises. You had the 1987 correction, a bit of an Asian crisis as well, but you didn't have an inversion of such scale and such a boom that was so significant as the dot-com boom. Even though the GFC was more globally destructive, it was coming after the dot-com boom, which had already desensitized this indicator immensely. So you are actually falling faster below the zero line than you ever have. And you've taken out every major crisis except the original great one. You've even taken out the 80s one that you can't see here, but that you would see on a 30-year. So that's point number one. The harshest indicator is falling harder than it's ever done and has surpassed everything else. And it's a 100% indicator. So when I say reset to you, when I say they aren't trialing CBDCs, they are drilling CBDCs as part and parcel of a go live event potentially, that is what I am suggesting. And I feel that it's not me being ridiculously misery porn. Some people think, oh, you're just trying to get attention by being the most bearish or negative person. This is an end of cycle. And this is the problem, bringing this back to crypto, that I get, is that we have, for example, guys that are very focused, thinking everything is the bottom, and you've got these 4-year halvening cycles like this that go on and on and on, and they just go, it's a pump, and then a bit of a bear market, and then eventually peak bearishness, which is like now, and then you're very close to getting a major bull, to not recognizing that there's a 40-year, as you so eloquently mentioned, macro reversal in debt markets, which is actually the death of money, and everyone's going to be chasing liquidity. Retail is going to be chasing any form of liquidity to make payments for food, energy, and far more lower order hierarchical needs than they normally have. It's not going to be about, I need a Cabriolet Ferrari and the third pad in the Bahamas that the FTX family will be selling you if they ever get arrested, or if they ever seize those assets in giving sheep like me a shearing. But anyway, so this cycle is far larger, and people that are crypto focused are only focused on the lowest order of cycle on an industry that's barely a decade and a half old, while not recognizing we have gone through many boom and busts of debt cycles, many cycles of demonetization with Romans trimming gold and silver coins. That's why they have ribbed edges on them, so that that could be identified in the future. So much so that we even have, tools to show that a coin has been trimmed, because we've been this way before, if you know history and if you read. Just because your frame of reference happens to be your little life, which all our lives are little by historic significance, doesn't mean you aren't going to see things you've never seen before. You haven't lived through a war, a world war.
What we're potentially, I mean, there's so much to unpack already, but what we're potentially calling for is a new monetary system. And that sounds absurd. I've got a great book that I'll have to leave in the description called I think 3,000 Years of Debt, Currency and Finance, and it goes throughout history. Every time we've gone from a new monetary system, the word tally comes from, in the UK at one point, in Great Britain, we used to use sticks as a form of currency, because essentially it was an IOU, if you were, and it's also where we get the saying the short end of the stick. So the person that gave the debt out had the long end of the stick, and how they kept track of who owed what, who was a debtor, who was a creditor, was essentially you had the short end of the stick being given to the person who owed the debt. Now, can we imagine using sticks as currency? Yeah. Absolutely bloody not. But what we're essentially calling for here is the end of a debt-based fragile system that's on its dying legs, into potentially a new system that may involve the blockchain. Am I right in saying that?
I think there is a seminal change in financial system, and they're telling us that. So it's not me being clever and making a bold prediction. Yep. I think you're just not listening if you don't say it. I just happen to listen. If they're telling you that's what they want to do, if they're telling you they want to control the rate at which money is issued in a wallet, and they can just inflate it or deflate it by giving you a haircut or by giving you extra central bank digital tokens, it's because they want to have ever greater control. So the thing with power is that that power always seeks absolute power, and it corrupts, and absolute power corrupts. And the more you do that, the more you seek absolute dominance, because the more you're in fear for what is but clearly obvious, that you are being extremely dominant and freedom stripping, which puts a target on your back, which makes you have even greater fear of those over whom you rule. So you then work on the premise evermore that they are essentially your enemies that need to be sheep managed, because they would turn on you because they know all the things you've done, because they've become so overt. And as a result, you have an entire us and them, a supremacist doctrine, where whilst you don't believe in religion, you aspire to godliness in terms of deciding who has the right to live and who doesn't. If you listen to Catherine Austin Fitz, she's of the opinion now that there were targets for how many people need to be, through the process we experienced, terminated as part of a population control mechanism. So there is a lot of great evil, and these people are acting out on godliness, whether you care to see it or not. And you get to be the sheep that gets selected for shearing. And they get to be the supremacist because they are divine and born into this by bloodline. And that's kind of it.
Yeah.
But we're getting a bit dark there. And
I know, yeah. And this is what the yield curve essentially is predicting. The thing is with 2008 and the dot-com boom was it was largely Western focused. There was some fallout elsewhere, but this yield curve and the yield curve, the yield curve, I haven't actually looked at the 10s and the 30 month. What I have looked at is the 10s and the 2s, which does have the yield curve that essentially predicted the 1989 crash, was it?
Yeah.
That is potentially what we haven't had the fallout of this most recent yield curve. That's what the worry is at the moment, I think, is what does that look like? And it's got 100% hit rate, and the time between the yield curve playing out on the 10s and 2s and it happening, historically it's been anywhere up to 2 years. The one that we had leading into March 2020 was only 6 months. Doesn't look like the crash that we're going to have from this yield curve is going to be too far away at all. I don't think, certainly given everything that's going on.
Yes, it is. So the pain is still to come. you're only just starting to potentially maybe hear some of it. That's the message. The real pain, and you will have an event that will be associated to it. And everyone will go, oh, you only turned out right because of the mosquito bite treatment and the malaria, whatever the case may be. I didn't mean to say the word, sorry. So the whole key event is there's some new monkey bites coming next, and green watermelon communism. We're having a climate emergency. They've once tasting the power of lockdowns. I don't think they're going to let it go away.
Yep.
And they recognize for a power to be entrenched, it needs regular exercise. So you need to think about where you're going to be spending your winters and what narratives are going to be thrown at you during that time, which is why I've said stay out of the winter of discontent that might be coming for you. But just bringing it back to crypto and not too excessively reset, there's a lot that we can do on that. But as all in crypto, the question around Bitcoin and the points you were making is people do need to consider that Bitcoin, especially stable coins in the crypto space, are a real challenge to a central bank digital token. So if you have a guy called Carstens who ate all the pies and tells you he wants to control, he has all these lovely joystick Game Boy tools that he can employ upon you as a surveillance tool in terms of what you're buying. You have all the mega corps already instituting voluntary for now, carbon scoring, and these tokens that they will change all your money for, potentially if they were to break the banks and empty all your accounts and then say, oh, I know you're upset. Guess what? We'll recompense you with this new innovation. That these particular tokens that they will end up giving you in a wallet will have far more intrusive features to them and will dominate your existence and the manner in which you're able to use them. They'll be like loyalty points in a shop. You can only use them in that shop. You'll only get so much. They're not deemed to use that valuable to other people, but they're going to try scale that a little bit, and there'll be various versions of them, but they will all be CBDCs. And then they'll also try to sell you fake decentralized tokens. I think it's the end of any real veneer, if we ever were, of private decentralized tokens. I think that what's dying is that element. Blockchain is not going away. And further innovations upon it, which could include hash graph, whatever. That digital money is absolutely not going away. Ripple has been courting the cartel of criminals shamelessly, so I'm sure it will survive. Ethereum has had, as I've mentioned many times before, so I won't go in depth, property register and many other apps, all of which will comply with the surveillance aspects. I can see it existing. Bitcoin is a curious one, because if it ever goes back into a bull market, they're going to want to tax, they're going to want to extract. So you're probably going to have to be on a clipboard with a name, how many you own. You're going to have to do far more severe and intense registration, which is going to strip you of any anonymity. You're going to have to declare your domicile and your residency, and you can't change it too much. They're going to insist that somebody somewhere is getting taxed for it. So we're seeing an initiative at the same time. They want to globalize corporate tax of 15% minimum all over the world, so that there's no arbitrage anymore. They want to kill the nomad capitalists like me, who actually can live in 3 different countries, and actually not be officially resident in any of them, or have a residency in one that has territorial tax laws. So I don't pay, in Panama, you don't pay corporation tax on anything you do outside of Panama. Well, most of my clients aren't Panamanian. So they want to kill people that have stopped feeding this beast. I've always suggested everyone should do this. We have to stop feeding this beast. And it's actually a moral duty, because it is like giving a vampire your children's blood. And I use that with intent. But anyway, if we just look at Bitcoin, for example, this is where it is, bringing it just to a technical assessment back. What we're looking at is Bitcoin versus gold. I like to compare Bitcoin with gold, and I haven't done it in a bit, because the two were both positioned as store of value. One was the old school wooden ship, according to Michael Saylor, and Bitcoin was the brand new shiny battleship made in metal that was faster, lighter, etc. How it's done since our first gold, we were very bullish here, so we haven't always been bearish. We were very bullish, by the way. Here, this we affectionately refer to as the first cup gold nugget. This splitter that runs through the middle of this pattern also dissected a key bear moment during 2018 that we were one of the few people expecting a short sell. Again, Bitcoin underperformed. But after this point, this was one of the rare moments where we said even everyday people will make extra normal profits by having a leverage long trade, even if they just had a simple 2x, 3x put on. And our target was well made. This is a log scaling. We've added in, by the way, just so that everyone's clear, and this is gold ounces to buy a Bitcoin. So at this point, it was about 5. Up top here, you were very close to 38 gold ounces to own a single Bitcoin. So just to give perspective to that, if gold is now, call it 1,700, I'll have to check the exact price. But let's just say round number 1,700, to pay 38 ounces of that. I mean, that tells you where Bitcoin should be priced if we still had the same relative. So it's around 40 times 17. It's a pretty big amount. Yeah. You're talking about 70,000 odd that you're not at anymore for Bitcoin at all. So you can see that the relative gold ounce has continued to come down, and we've been in a downward cycle. In fact, if I look at this a little bit more closely, technically it was quite easy to, so doing the two store of value, because it's not a transaction token, Bitcoin, quite clearly. But Bitcoiners hodl it because it's their best money, not their worst money. They try and get rid of their fiat. That's how it's been until now. Maybe that's changed with the sell-off, but generally people are holding it on account of store value. However, inside of holding it as a store of value, they've lost 75% from the high. That doesn't mean if they got in at 2012, they're still in the money, no problem. If you got in at the top, you've been butchered. So if you just look at this high and how it went technically and why it's so interesting, is that you actually took out the previous high marginally. This is against gold ounces, Bitcoin, gold ounces. Please remember this is not a Bitcoin dollar price. Little double top, little neckline for your double top. That gave you a downside target that got met. We've also highlighted this head and shoulder, which also is on the dollar side. So you have what we call a nestled structure, a double top on the head inside a bigger environment. That had a neckline over here. You saw that break. You had a little fractal. You return move. You spilt. You ran into another key level, which was the first cup gold nuggets second interim, and the downside target from this head and shoulders. This head and shoulders we called also on the dollar price of Bitcoin, but it's also there in the gold. There it was. That brought you down. So you have a confluence of levels here. That saw you pause when you ran that level and bounce around on it and return move a number of times to this key structural neckline before small fractal, and then you spilt, and that spill let go of that level, and down you went, and you made the next macro level, which was this head and shoulders full downside target. All of this quite clearly, beautifully technical. When you make a target, you close because you pause for a while and you congest. That's exactly what's happened here. Then what happened? Again, technically bad, breaking all the way down. You made a number of levels on the dollar target. We told you the previous high. So if I just show you the 2017 high, it's also here or hereabouts. And you'll see it when I go back to, let's go 3 days. You can see that previous high.
Key level of significance. Yeah, for anybody that thinks that technical analysis doesn't work.
Key levels of significance that are going on. This flag, by the way, that also performed. You can see there's the line again. You can see where it targeted you to. That's where you're congesting. So you would have closed around here, a key target there. I can draw it in with a purple line as we typically do with our target. So that's That's our kind of HVF method technical analysis. It's not over focused on indicators. When we do a volume analysis, we do a wholly separate chart. So many people go, oh, you're a beginner, you don't do volume. We absolutely do volume. We do it better than anybody else, in my opinion. We do it for the pattern and the structure that we're looking at. We don't just drag volume by price across the whole screen. We look at it by price more than we do histogram, although we do look at histogram as well. And we look at pattern structures, and we try to get affirmation of the most likely direction when you're getting a squeeze. And we've continued to bias downside, head and shoulder, bias downside, head and shoulder, bias downside, head and continuation pattern at target, stall for a while, then downside. 4 key levels against the dollar were run. You know, we've churned here for quite a while, but then it preemptively gone down. But now, after that, you're getting a little bit of churn. And again, what I would probably say, skidding into a low. So there could actually be a short rest and even a rally, but that doesn't mean it's bullish. Remember, you've had this as a rally, you've had that as a rally, and that you actually quite early on had that as a rally. You've had this as a rally, and you've had a monumental move that actually saw Bitcoin go to 25K at one point after touching 15, and none of them were reversals. This is why we continue to say everybody's framing, and this is a complete rookie mentality, stamp it out. When something is going down, especially something like Bitcoin where they want to make money on it, it's all about calling a bottom, and when therefore it's closer to going up. No, it is closer to, if it ever goes up, to going up again. Calling a bottom is not a smart idea. The momentum of the trend is your friend. Do you want to run behind a big concrete ball smashing its way through all the cars down the road? Or do you want to go on the other side and say, I think it stops before my car, I'll stand here, and watch your car get crushed and be crushed with it? So in essence, remember something, that degree of trend is for your friend. Some will say, but what about the trend from whatever it started at, a cent or a dollar? Well, it depends on your time frame. So your time frame needs to match the market that you're trading and the patterns that you are trading. If you are trading this flag, you should be south side orientated. And you should also bear in mind fundamentally, and this is no longer a technical discussion, you should be bearing in mind fundamentally, if who ate all the pies, Carstens, is going to introduce a central bank digital token, how badly does he want a stable coin which actually doesn't have any of the surveillance features? I mean, what is a guy like me going to do when they give me their CBDC if I can buy USDC or even Bitcoin once I think it's bottoming, if it were to bottom? Well, I'm going to dump whatever garbage they give me that is spying on me, obviously, and turn it into USDC if I'm concerned about the direction of Bitcoin, and if I think it's bottoming, Bitcoin. That's what I'm going to do. And what are most people going to do? Or buy gold and silver as well, personally in my case, but many people will think I'm a nut for saying that. We can come back to that later. But so how are they going to allow? Remember, Rockefeller is the guy who said competition is sin. So they actually need to break everything that could be competition, so that the introduction of what they bring is the new ultimate solution that comes with their blessings and all their regulation. Not that their regulation saves you from being given haircuts by the death cult whenever they want to, as witnessed by MF Global and the head of Goldman Sachs that was blowing everybody's money in much the same way as the microcosm that is FTX has done, which is probably the microcosm of every major bank, including Credit Suisse, Deutsche Bank, Citibank, Bank of America. So you could lose all your bank balances and you'll be bounced into whatever they give you. But first, if they starve you a little bit, they don't get to pay you a little bit, they get martial law and a bit of mayhem and shoot a few citizens because BLM were breaking a few stores open. They get to bring misery on you. They get to kill inflation and do a real demand destroying thing. And they take everybody's wealth down. They reduce your supply of things. You just want the old normal back. And then they put a new contract in front of you and say, sign that.
Most people are going to take it just to get away. Yeah.
You're signing because you're hungry. You're signing because you're sick and tired. You're signing because they held your goddamn head under the water and waterboarded you until the last molecule of oxygen you were breathing through your eye socket. That's why when you came up, you went, you would have signed anything, you would have confessed to anything. That's how they do business. This isn't a friendly negotiation. These are mafia extractionists that explain to you how they will get what they want, and you will comply. That's what you're staring at. So my question to you is, whilst this isn't the worst downside selling I've ever seen, it is against gold that's also had its moments going down. Do you think long run they let it survive? That's a concept discussion.
In regards to Bitcoin, I mean, this is a really fascinating question that you asked. So before we started the stream, I had said that I'm actually not a long-term believer in Bitcoin. I think the vision that Satoshi, whoever he, she, or they were, his vision was a real one. But really, what he started was a technological revolution. So blockchain being the technology, Bitcoin is it's a blockchain, but it isn't where blockchain ends. It's kind of like, and Wells Fargo did an article on it called "The Blockchain: A World of Possibility," where they essentially said, "Look, we're moving away from the Internet of Value into the Internet of Things. This is how we're going to transact everything. So your property is going to be on a blockchain, your health records, because you can use blockchain for all these things." So right now, me and you are communicating over the internet, which was a revolution. On a PC, which was a revolution. We drive cars, which was a revolution. Blockchain is similar in the sense that it is a technology that is going to be integrated into all of our lives in the same way the ones that we're using right now are, and we don't even think about it. But Bitcoin was the introduction of that. But do we all use the first computers that we were given? Or imagine using the internet as it first started. You know, we'd all be hearing that sound again as it starts up, or using the first car or something like that. So I actually think that Bitcoin, and here's the thing with Bitcoin: how many people do you think would be talking about it if the price appeal wasn't there, if the speculative aspect wasn't there? I don't think many.
To me, it's always been mainly about speculation. I never pretended to be in it for the tech. I'm actually a poor technician. I have to get people to help me do all sorts of things. I'm all thumbs. But I want to make an additional point.
Sure.
Every major, coming off what you just said there, every major innovation, surprisingly or not, you will have found has come through essentially military-based origination. So radar, Bluetooth, all of these things. So anything that is useful and is scientific is first used by the military industrial complex and dark state. Internet's all, and don't be fooled by universities. They're academically kowtowed into, they hire the best, the smartest kids in the Ivy League, all the ones that come from the right family lineages. It's Cambridge and Oxford in UK. It's a known thing. They have the MI5 and I6 recruiters there. Often they'll recruit you before, or it's more subtly nowadays. But the technology and the professors, these people are funded to do research, all of these things, right through to the lab mosquito bites that everybody got, were all funded through university and the defense dark state complex. So all innovations around radio, Bluetooth, everything has come actually militarily. And it's safe to say that blockchain, in my opinion, came from the NSA. You only have to look that Lifebook existed, which was the actual version of what now called Facebook, or Life something else. It was called Life Notes or whatever. Pretty lame name, but that's what they were doing. And there were NSA documents that replicated Bitcoin money long before the 2009 collapse. So I've never been a big buyer. I don't over fascinate on the origin. I focus on principle and concept, not fairy tales and narrative. But I've never been a big buyer of the Satoshi as one individual that did this awfully kind, mythological, generous thing, never collected his awards, never had a photo, was able to disappear without the dark state even being interested in who he was and exposing him. which hasn't happened, or if it was a group of people, which is quite possibly more likely, etc., etc. But basically, my view is everything you told is largely, almost certainly not the truth, and there's some other narrative. But it's more important to focus on what's its purpose and who's it serving. And is there any role for it to serve you? It served me in a manner to speculate on and help others to speculate on, in that I could make some money and I could help others to do that and also be paid for that. So that's how it served me, and not get wrecked, to try to prevent people from not getting wrecked, have principles and all of that. But I've no belief system of things. And we spoke about this before. And you were mentioning belief systems, or you were mentioning Van Tharp. And I said the one thing that he says that I do agree with was, you don't trade the markets you see, you trade the markets you believe. Which might be you believe you see, or you just believe. So you have a view and you go for it. And when what I was saying is that with our program and the people we've spoken to that were performance coaches further on that concept, is that people inherently first form an opinion off a couple of tidbits that might be supportive. They in other words, let's just clarify what I'm describing here. People are not rational, they are rationalizing. And what I mean by that is, they'll look at my face, for example, and say, oh, he's got terrible scars, bald man, old man, and they're of a different generation, they might no likey. And then they'll listen to something I say that provokes them, and they will rationalize retrospectively the decision that they already came to. Somebody else will look at me, he comes from South Africa, he has my accent, it feels like something familiar. He's also a bit skeptical about something, and he'll says similar things, use similar phraseology. He'll have decided he likes me, and he'll find something I say that sounds relevant and true, and he'll rationalize that I'm a good guy. So we all are continually making these snap judgments, actually, with very minimal facts. And then once we've committed, we refuse to see things that actually undermine the original snap judgment. So they've shown that if you put two newspaper articles on a stock, one that's supportive and one that's undermines, if you've already positioned long, you are more dismissive intensively, and you validate and justify why that will have low impact. And on the other one, you highlight why that will have a hyper impact, because you've already married. You've married. So the whole concept of our trading methodology and all of this is to stamp out the word belief. You've got to stay open to all possibilities and not marry. Marry your girlfriend, make her your wife. Do not marry things. Do not marry things that are put in front of you, that have been manufactured, that are created, that have a narrative that's really cute story or whatever. And emotive manipulation is high and very powerful in all of these things. But in the same way, in a trading level, when I did the deep dive with Rand, and you understand the mechanisms of how your brain works psychologically, is you actually will snapshot Bitcoin and say it's fallen too far. It's just had a spill. It's probably bottoming. And now you will look for articles, news, or anything that gives you comfort to a view you've already snap judged your way to.
I see this every day. Every day I see this.
And closing the possibility that Bitcoin can never be shut down, it's impossible, is what you see is someone who is married so hard. This is like a maximum, maxi. It's married so hard to an inevitability that could absolutely still happen, that is potentially standing in conflict with future directions that has automatically been declared, and you should have some degree of dis-ease. Plus, you have people that have already proven, I mean, Richard Hart has mentioned it often, that a Bitcoin Cash developer found an inflation bug. So this whole notion of pristine code and everything, it's almost like, no, this was the Bible. It was written with godlike precision. I've heard this kind of speak with regard to Bitcoin code. And in actual fact, other things are faster. It has had failure in it already. So this notion that we built, and I mean, I was like that with FTX.
Yeah, it's absolutely
I didn't think. Yeah, I didn't think he would be let to go down. I saw he was being cultivated for something, the PR. Actually, it was a takedown. And I thought, okay, there were some warning signs. I suppressed them because I was enjoying trading on the platform and making the best money, and I could always withdraw easily. They were quite good that way.
Yeah.
And I got stung, and I have to own and accept that. I undersized for the counterparty risk of a major exchange takedown. And we've had it before in Mt. Gox.
Yep.
Just like you've had an inflation bug be found in Bitcoin before. So why couldn't one happen? And this time it's a malicious actor, and suddenly there's 10 trillion Bitcoin. And it gets spitted out for free on the internet, and a whole host of people get to spend some of it before everybody realizes it. And everyone ordering gold bars. There's lots of people that will take crypto. And then what does your Bitcoin become worth? No, mine is original and true. We'll fix this. You won't.
There's lots of things people don't see. I mean, one threat that I've always thought is Satoshi still has 1 million Bitcoin in a wallet somewhere.
Yeah.
What happens if they move? Imagine what the market would do. And the Federal Reserve, I actually did a video on this, is one of the largest holders of Bitcoin that there are. The Fed owns more Bitcoin than Michael Saylor. That's a fact. After the recent confiscation they just did off the Silk Road guy, the prior one to that was the Bitfinex hack that they recuperated. The Fed has nearly 200,000 Bitcoin. Michael Saylor has 130,000. Yeah. So that just there's so many little extra things that, are going on.
It's like treasuries. Essentially, nobody necessarily right now wants to break that market. But the truth is many people have the power to. If they do, they're not for profit sell. And this is why I say that we have already witnessed a controlled demolition of an entire exchange that I now assess could have already been set up from inception to do exactly that from the get-go. The enablement he had, this guy's 2-year round tripped from next to nothing to 36 billion and back down again. And 136 companies were opened. Umpteen mergers, acquisitions, JVs were entered into, all in 2 years. I couldn't have got through that much work in 3 lifetimes.
A Trojan
There's
horse
obviously
indeed.
an entire corporate finance team that's set up. Go try open a company in Singapore. You've got to do memorandums, you've got to declare, you've got to do all of this. You know how many people you have to engage to open 136 different versions of your company? That's just on FTX, not Almeida alone. That have to get and open all these things for you and get names, directors, do all of this. Just the process, the corporate finance of structure that has been wound, that was created, that now has to be wound up, the complexity, the scale, the investments in other things like BlockFi, and Almeida actually owns shares, the majority shares in Exodus Wallet and all of these things. The investments, sending the money, agreeing a price, negotiations. How could you have any time for trading in all of that? I mean, so the whole concept of this is this thing has been put up, it's too fast. And this guy still had time to buy deals of naming standards of Miami Heat and, investment in Formula One and FTX. You don't just invest, you've got to agree a deal. You'll have the documents to sign this big. Formula One, this is not their first rodeo. These guys, it's like you need a MasterCard in the World Cup. Imagine the deals there. Imagine the back office that does all of this paperwork that all gets done to protect, marketing. So it's all garbage that this all happened in 2 years, because by my reckoning, he was probably bust in May. They probably already were a fractional reserve system by then, with the 3 arrows cap failure. And the difference is no one knew it, so we weren't all asking for money at once. They would be receiving deposits and sending it out, and they were probably fractional reserve. The guy said there was no controls. They were paying expenses on disappearing chats. They were lending money to family members to buy houses. Some were just taking money to buy houses. 19 properties in the Bahamas. If you're spending time going shopping for homes in the Bahamas, how do you have time to do all these other things? This was a criminal enterprise that we're speaking about.
Yeah.
Plus, you get all the other nefarious uses that will get very resetty, and many were using the platform. The fact that the whole takedown on. And this is the unluckiest thing for me, is this midterms, because I traveled the 5th, the 6th, and the 7th, came back a weekend, had loads of new stuff, spent and shopped, and I had to strip out wardrobes, tidy up. And Monday came and I tried to withdraw and it was done. I missed my shot. It was the wrong time to be in a different space. Tough luck, but never mind. It's your challenge and you to overcome it. But the point of the matter is, that all was synchronized to be taken down at a major political event. Well, obviously, some paper gets burned, some evidence gets destroyed, all sorts of useful things loops get closed when a business is then closed down, and the funding purpose that it served for those particular midterms are up, and boom, chakalak, they've taken your money. So the whole conceptually, there's a lot of orchestration.
Absolutely.
And you're going to think that Bitcoin has escaped being a role in any of this orchestration, and you have this little pocket of freedom. This is me with a rat problem in this barn that it's absolutely overrun, and I'm burning the barn down, and I'm going to leave one of the doors so that some of the rat population can escape. No, sir. I'm shutting it all up. I'm petrolizing it from the outside, and I'm wanting to burn every goddamn one of them to save my corn farm. Now, 2, the control structure, you are a rat in the rat farm. They're not doing any of this for you to get away. To bring in their Bolshevik communism, they need a great leveling. They need poverty. You can't have wealth. They created a virtual digitalized wealth that's been easy for you to steal, as opposed to something you hold in your hand that they actually have to send a man with a gun. Not that they're beyond doing that, but it takes far more effort, far more logistics, and far more intel and capability to come and grab that than it does to take, I don't know how many kilos of silver I lost in the digital game. So I'm saying to you, digital is dangerous in terms of reset. Physical is good. It is more robust, and you should think about your exposure there. Thankfully, I was listening to old Moon Crypto Boy once, who was always saying, I'm 99% in crypto. And I was always going, wow, that don't sound so smart to me. 99% in crypto. Well, if you are 100, and if you're all in Bitcoin, or if you are all in Sol, that was your best bet, you've got trouble. If you haven't bought some property to live in, if you haven't got some silver, if you haven't got some off-grid, power down, internet down based wealth and potential barter, if you haven't got some self-reliance tools at other levels, you're done. You're done, because you're easily put to bed. You're easily turned into a serf in the Bolshevik system. So the question I find useful is the parallel and the microcosm FTX potentially represents as a takedown candidate for how the banks go down. Let's just be clear. The likes of Credit Suisse, Deutsche Bank, every of the major banks that are currently 12 weeks drilling, in my view, not trialing, a CBDC across borders. So we're talking about British banks with American banks and blah, 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 carrying on. And don't forget 7/7 in the UK, there was a drill. They did a perfect drill with all the same stations that a statistician told you was the probability of I don't know how many billion, that they chose a bus stop and a tube station that were all the same. Don't forget NORAD and the F-16s sent out away from New York to drill planes flying into New York in a virtual environment. So these guys do drills just before events so that they can go live easily and everyone's on script if things are going right, or that they can postpone and have a cover story as to why people were caught doing certain things if they don't go live. Hey, we were practicing this, we were doing this, we told you, it was all written up. What's your problem? What do you mean? So that's how they do this. This is military. This is dark state. This is money, and this is right away from lab mosquito bites and malaria. This is everything they are managing. They aren't leaving one door open. They aren't saying, we don't do science, we don't do biology, we don't do health, we'll just do guns and war and all of that. They want to run it all. They want to kill all the rats in the barn. If you're one of them, they're going to take you down. They want to hollow you out in wealth so that you will accept whatever they put in front of you. And as a result, what is Bitcoin's role? I can see the other things being useful to them that they'll keep. A lot of the other alts will be crushed. And it doesn't matter. So for the Hexicans that say, well, but, Richard Hart was clever. I get some guys that ask, it's not a security, dodge the law. They will say in spirits it's a security.
Good luck.
What do they care? They'll put a bench judge in there and say, well, even though you said this here and there and there and that it wasn't for intent, everybody who sacrificed actually knew and understood, and the actual intent was not being framed, and you've just done this to sidestep a law, and it's our express opinion that you have in fact created a security with the intent to people who invested in it bought into it for the pure reason of earning an interest in staking and seeing capital appreciation.
Absolutely.
As a result, boom, stamp, it's a security. Never mind you thought you were a clever dick. We're bigger than you. We own the bench, we own the judge, and we've decided.
Yep. Yeah, this is what people need to find within the crypto space. You need to find something that people are going to use. You need to find something that's going to have a use, not something that's use is number go up. So we'll buy it because we want to get in before everybody else does. This is what you need to find. This is why smart contract blockchains, Hex, I did very well off of when Hex first came about. You went on the website, you put your wallet in and you swapped Ethereum for it. I did very well off that. But I haven't touched it since because for me, it's kind of like instead of a timeshare that the Fed dictates and the army of the United States has the backing of, you're essentially trusting Richard Hart as the backer. I mean, I don't know how that's going to end. Could I ask you to potentially give us a little bit of your TA on the dollar? We've gone through so much.
I'll do the dollar, and I'll just show you on Hex. I mean, by the way, calling the top means in Bitcoin, you called it at 69, not 64.
And it was at 64.
You can't call the top on Bitcoin. We got to be precise about something. When we say we called the top on the bond market, it had made a high that it has never taken again. You can't say I called the top here and it goes down. It trades back up and trades higher.
Yeah,
because
crazy.
That's the top.
Yeah.
And you didn't call the top. You called a localized high that was later seceded. And it doesn't matter by how many days. If I go to days, we can even count. It doesn't matter by how many days. It only has to be by a single second, but it was succeeded. So over there, you can see actually there were 2 days there, 3 days, 4 days, 5 days. So that lack of precision about, and the degree that it is repeated, that he's applying the repetition and makes it eventually a truth. I'm sorry, it's inaccurate. It's not a truth. So part of Sniper is the interrogation mark at the end of the word truth is the highest level of accuracy you can manage. So don't make a statement that's inaccurate and dress it up as truth in me. And that does a bit slightly annoy. But as I say, I've got no grievance apart from that being kind and helpful to me actually in my early doors of understanding things. And actually as a decent guy, I would potentially trust him more than the Fed and the dark state, because I loathe the Fed and the dark state and the military, but he's still only a human. And if they lean on him, you end up with the Fed and the dark state anyway. And that's the key point. He has no control over. Initially, this looked like there was an attempt to hold a level here. And then they got spanked. Okay, it got protected. There's been a bit of plungy protection going on. You can speculate as to who you are. Is that the Origin wallet? Not wanting the headlines to get out of control. I don't know. Maybe it's just buyers with bid orders showing up. But the break through this key level, you will remember we've said we think you trade sub a cent and it could go to next to nothing and it gets crushed. This is not a good technical structure on that. At one point, it looked like it was holding it. And I said, okay, it might recover and do fine. Didn't hold for long. It is now peed through the roof on this floor over there. Again, for people that are hiding. And we have really strong belief systems in Bitcoin. You get the Bitcoin maxis and in Hex. I'm not here to spoil a Hexican's day at all, but you have a belief system if you think you're untouchable and that you can't be taken down. And I'm here to say just at a dominance level, at a number of levels, this is not good. If you look at it on the Hex West, which is against the token everybody swapped to get on board, that is also a problem for you, because you got bought up and now you're rolling over if you spill through, and you've got this flat level that you're looking like you're going to give up again. And you've never closed against WETH lower than the 2-3 WETH. You can see all the bodies. You've had wicks. Now you're threatening to do that. So actually, if I jump between the Hex WETH and the Hex USDC for the guys that were involved in that, you have until recently never closed below 3 cents on a 3-day chart. I can even make it a daily, I don't know, or a 2-day, because many people don't look at it. But actually the lowest daily you have traded the last 3 days since the high. And we did call the high. We said the 50 is the high. that's a head and shoulders. You're going to trade through 37 cents. And that is a true high call because you've never gone through that 50 again. And it doesn't matter how much, you're earning in hex and interest. If it's lost, the difference between 50 cents to 2.7 cents, you've actually almost lost 25, times. You need to go up almost 25, call it 3. Okay, 20 times at 2.7. You're on 5% of what you were. You're on 5% of what you were at the high. Great if you were in before, but why do you want to let it eat it all? So that was just a little bit for because they are a very strong belief-based system.
Massive community. Yeah. They're a very zealous community. They're very sort of vocal as well. And I've got nothing against Richard Hart either.
So that's a comment on that. It's a strong community. And as I say, none of them, they've been very good and supportive to me. And I feel almost a little bit bad. I'm down talking the risk. It is money management. If this challenges you and you're a hexagon, just think about what I suggested and do your own analysis. Snap out of a belief system and recognize a first loss is sometimes your best loss.
Yes.
Holding on to the bitter end will leave you hurt and angry. And then you'll see what I was saying, and then you won't hate me anymore. You'll hate Richard. Rather, don't hate him. Just decide to take a loss. These things could be taken out of his hands. I don't think he's a cut and run guy.
No, me neither.
Not for a minute. I think he's trying
stand-up guy.
He's trying to help people generally. So apart from all that, I think don't have. And I'm grateful and thank you for he showed me how to use MetaMask and do his stuff. So thank you for all that. So anyway, so we got sucked into what's actually but you were asking about the dollar.
The dollar, because that's of extreme importance to me, because you can, other than the correlation is clearly there, and dollar weakness or dollar strength to me just really represents, if the dollar's weak, that money's going, that demand is elsewhere. Because I've almost thought that maybe there's a similar correlation with ARK and Bitcoin and Grayscale's BTC and Bitcoin, because Grayscale's Bitcoin is right back in the sort of March, the crash, basically. That's where it's at in terms of price. Is that maybe similar to ARK, and are we doing a similar thing there? Is that basically predicting the future of where we're going? Because GBTC is typically institutional. It's not, retail aren't really buying it.
Yeah.
So maybe that shows where that sort of institutional demand is no longer there for Bitcoin. Maybe it's sort of front running the price of Bitcoin.
And the institutions will be the first to run ship rather than retail. Retail will be the bag holders. So it is interesting, and that's why it's at an NAV. But you also got to wonder, could there be more Ponzi's or things out there?
More runs.
Are we done with everything that's criminal to do with us? So we are highlighting that the rates have turned. So I was pointing that this has been the big driver for dollar strength, which is what's been the lean on the bear markets. This might even give some crypto guys some encouragement. I'm not specifically putting it as a bull case. I'm just saying that if the dollar rests, this looks like it could spill some more. So the interest rate that they're expecting is coming down. So the debt is getting bid up. People are going back into debt for a bit. We've still, in our opinion, we've still called the top in value, which was the low in rates. That was at 0.33. That 10 year. So that to us was the bottom in rates. We said this is a turn cycle. So whilst that can come down, I don't see it running that low by some way. But as ever, you could be wrong. So when the debt is coming down in value, the US debt, it's usually been a steady driver the whole way for the dollar. And when it rested, the dollar rested. So the dollar index, if you recall this, is made its target here on that orange square on the Dixie of a big HVF. And this is why HVF matters. HVF method matters. In fact, I'll put the original big chart on here and I'll show you. That was the target of 110, and you made the other side of the channel. And in fact, I haven't drawn this. You see, this was done way back in September.
Yep.
Before September, I drew from here. So it was on this candle. I expected it to run the target and then dip.
Oh, wow.
So that's the forecast. I haven't been to this one in a while that we had at the time. So post the target run, we expected a dip. This has actually been quite violent, a dip. I just did might wind up for a while, go sideways for a bit. I forecast a low here at about 105. Well, it's already just about in a single two candles afterwards gone straight down 105. So it's getting the hard slap first, and then it might moderate. So this upside HVF structure, which is the squeeze that made for this, topped out at its target and was also at a channel high. It actually made the overperform to a channel high. Now, there were a lot of people, and even Brent himself, when we had a blow off through the target, we're going 125 Dixie, some said 150 Dixie. So whenever people are at peak, and some will say you're like, it's almost like that with bearishness on Bitcoin, but people were getting peak aggressive with Dixie going forward. And I was like, you've just run the 111. You may get a tiny bit of overperformance, but it went through that quite quickly. So you actually had a blow off. There's actually a gap in this chart when you ran through here. Now, if I show it to you on a smaller time frame, you can see that's a bit of a surge blow off. So you'd already made the target, you pull back once, blow off, then the volatility got high, and you fell through this basing line here. So just remove that. So this is pullback territory, and now you're down. So I actually think the signs for Bitcoin on the shorter term are actually, my apologies, not Bitcoin, the dollar, it's actually quite soft. So this could help create the potential for people to start buying a Bitcoin bottom, and they're going to get sucked into the Bitcoin bottom thought on this, because the dollar is going to soften. Why is the dollar softening? They gave a dovish. So at the same time as all these things happened when I was flying, we also got a below, for the first time, two inflation numbers below on the same day, a CPI and I don't know if it was a PPI and a CPI. No, it was a core CPI and general CPI, both undershot at the same time as the midterms. So that's obviously helped the Democrats. Oh, inflation coming down, all coincided, FTX bust. So I had a dollar crash, this whole other story go on, which we don't need to revisit, going on as well, based on the data. So with that, if we are getting more obvious signs of a recession and depression, a slowing in the housing market, yada, 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 which we absolutely did when we first had a recession and they denied it was a recession. So we've always said we're in a hyper stagflation. That is a very negative growth environment, including contractually, lots of long, lengthy bleed out contractions, which is what I feel we're already in now, with a stubbornly high inflation rate. But what ends up happening is you've got two bullies on either side of you and they're squeezing you. And you turn one side and you get the beat up of the economic downturn and you're not making any money, your job's getting cut, dish, 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 slap, slap, slap. You turn and run the other way. Your energy prices are high. Your rent's gone up. The cost to catch the tube into London, more strikes, more money, more everything, etc. So your costs. So you turn away from the inflation. You're now turning to the other guy, and he's just decking you with job losses, market cuts, all sorts of things. So everybody being really, really lean and tight. We're seeing it. We got ransomed by Vimeo on our Vimeo account. They said, yeah, you're using this amount. You need to become a corporate client and pay us 5 times more. Otherwise, we cut you off. And they just pulled the plug on our stuff. We got courses, materials, people watching it. I was like shocked by the degree. They've lost about 70, 80% of their share price. They've gone from being cuddly and cute to we need to make money now. And they're ransoming the few guys that actually have high usage, that actually look like they're running profitable businesses. So this is the new business practice right now. We're getting this all over the place. And I'm now looking at our pricing for a trading metamorphosis program and said, we haven't moved it since the bull market of 2017 in Bitcoin, because a lot of our people were coming from crypto during that period. And it's been stuck at that level. I say stuck because I've been happy with the amount of money we make. I'm happy with the value. I get a couple of things that I want fixed, and that price is going, and it's going to go up 25, 30, maybe even 50%. But it depends on, I want to fix a few things up first and make sure real spit and polish. But the point is, everybody's doing inflation increases because it's costing more, and all our costs have just shot up on everything we do in the business. And we're lucky to be a profitable business. I'm still a profitable business, but that's one of a few places where people are tech devs, what they want for platform developments.
It's
Everybody,
crazy. Yeah.
our first platform was developed for sub 20 grand GBP. Now I get a quote for hundreds, 200, 160, 70 thousands of dollars. We did it for like 16.
Yeah. Yeah.
£1,000, and it had a lot of features on it. Now we're seeing how people are ripping it. So that's just anecdote on business costs. So this is showing the Amazon cutbacks. You should have a look at the Amazon share price. First company to lose $1 trillion in market cap.
Seen it all. We've seen actually just today. Was it Google that announced today that they were also laying off 10,000 people? Everybody right now is laying off people. What I will bring up very quickly, and I know your time is very precious, so I don't want to keep you on this, but you showed a chart ages ago, which I actually brought up in one of my recent videos. And mentioned that you were the originator of where this idea came from, is the unemployment rate and the S&P. So the unemployment levels in the S&P and the correlation that you've got there, and how if you're expecting markets to just turn around right now and go into a bull market, well, you better expect the unemployment rate to continue to fall in an environment where the unemployment and the layoffs are just going through the roof. This is the environment we're in. Yeah.
Not going to happen, is it? Because especially if you're a retail business like Amazon, for example, that relies on everybody spending for Christmas, they're going to be watching budget far more on what they're spending on Christmas, especially as their credit card interest rates have shot up. Everything that they've got on debt has shot up, which is why I'm so grateful I'm going to live a debt-free life. Remember, that's an embedded Trojan manipulation tool to extract your disposable income when you need it least, and everyone else is suffering the same malaise. Debt is a Trojan tool used against you that will at the worst time turn against you and see you paying more money at the worst economic cycle as these things happen. Best thing is to keep your life out of debt. That little lecture aside, I mean, Amazon has lost $1 trillion in market cap. This is a log scale chart, by the way, which is what I've been doing a lot on the big time frames. But if I just take it down, you'll see that actually that's a much bigger move than it looks.
Wow. Yeah.
That's $1 trillion market cap. You've gone from 188 trading 94. That's a halvening right there, almost exactly. Funnily enough, I'm going to actually say to you, whilst Amazon looked poor, there is a divergence. Microsoft and Google, which have probably announced layoffs, are actually looking very good.
Okay.
So this is another thing on the firing people is good news for the share price, because it makes it sound, the message to investors is, we care about profitability. We're not a social welfare fund. It's not good for retail like Amazon that everybody's getting fired, but Microsoft, that's a lot of B2B, will do. This is a very strong rejection candle. And by the way, isn't this absolutely ironic? You can see I have legacy technical analysis on this. This major rejection happened on a funnel. I didn't even know this was going to show up because I didn't have the eye on when I was looking on it. That's an awesome rejection candle. So I'm worried shares go up, which points also to weakening dollar. Share go up, weakening dollar. Because if the dollar is drifting, that allows the dollar to take some of the loss of the recession. The equities actually can go up. In fact, they almost, just to stand still, they need to go up on a deflating, on a macro global macro basis, they need to go up. So if they then announce they're doing cost watching things, that's going to see that they continue to be profitable and be more cash cow rather than growth orientated. They stop getting treated as a Netflix, and they become more treated like an oil company.
Yep.
A cash cow versus growth.
Yep.
So they get the benefit of both, and this is clever signaling. You look at this. This is a monthly chart. That is an epic rejection candle, and it's an epic rejection candle off an upside HVF we called with overperformance that would have got you out there. So this is what we do in the community, and guys can go to the Market Sniper and register for a call and chat if they're interested in doing that. But that is not an accident that you're getting a huge rejection off an HVF upside funnel, and you would have been getting out up top there with overperformance on the first close below the red line, 299. Your latest, you would have got long 226. which on a big market cap like that is pretty good. And the other thing about this pullback that was pretty good is it wasn't capitulative. You can see there was a grind line all the way through. So it points to a kind of channel. There's maybe two channels. You might say there was a bit of a drift out of it there. So there's a couple of ways you can draw the capping top line, but there's no doubt there's a basing descending grind line that is reversed aggressively. Again, I showed you on the monthly time frame, and a monthly candle should be trusted. A huge rejection wick past the open and smashing up. That is momentum for Microsoft. So we've been equity bears, dollar bulls, and now we are reverting to dollar could be softening for longer, and we're seeing equity bullishness, and we're seeing it reverse at key structural points. Now, that is the probably the nicest one. Again, I'll just take the draws off. Look at that candle. It's a real rejection candle.
Strong candle.
And it's if you look at Google in the same way, you've got another hammer there where you've just mentioned that they've done. Thanks for telling me, by the way. I haven't had time to keep up with the news.
10,000 people, I think today they were announcing they're going to lay off.
Yeah, well, that is on a monthly chart. That hammer probably is a base plating low now for them. That doesn't mean they run back up to here and take out all-time highs. It ain't that kind of a market. And a lot of those businesses will be cutting budgets, but they'll find a way to be super profitable with whatever revenue they make. So they've got a lot of slush funds and special spending that they can put on one side. But you could get a move, up for an RH2 at some point. And this just turns out an individual correction over it. Eventually, David Hunter, if he waits around long enough and doesn't do time frames, can in fact be correct. Like anything, like the clock. Because if we get that, and we get a pullback again, and then we get this, and then they go full scale printing, and they drive the whole, we get the 6 to 9 months, we get the major recession, then we all have the problem, the reaction, and then their solution, which is printing, and possibly some CBDCs. The stock market will run, and it's well capable of running 60 and 80%. You saw it run from $50 on Alphabet to $150. That's your 7 trillion. Well done. It ends up in the stock market. It doesn't mean it's a good call that he's made, because he's been making that call all the way along this up and all the way along this bear. And a call without a time frame means it's just like saying one day the stock market will be higher.
Yeah. It's like me saying the sun's going to come out tomorrow. It's
yes. Even if you say it just after it's set. If I give you 12 hours, you're probably going to turn out right.
Absolutely.
So I criticize him more for the nature at which and the reluctance to not have a time frame associated to that. Because
what do you think Bitcoin would do if that starts happening with the likes of Google, or are these just specific stocks that are going to do this? But generally,
the big macro stocks are best.
Yep.
In this, they are the most immune. I mean, if we have a look at of Netflix and Meta, I don't know if you've been following that Balenciaga story. I won't take you into it, but it's unbelievable what's going on around us, isn't it? Tesla, little bit of a head and shoulders risk there, I think. I'm not sure how well the Twitter, but again, on the weekly, not such a bad hammer. It's much smaller hammer, not nearly as overt as the others, but he did just have that, again, that slight grinding descent, which probably means given enough pain, he can go up again. Don't forget, this is Rockefeller Autos. I mean, he's a front man for this. He's not running all those companies at all. It's not in 10 lifetimes are you doing that. He's a cultivated hero for you with his Mars narrative.
Yep.
I'd be happy if he just managed to get to the moon once and actually show us the original moon landing gear that with all the strong telescopes they're unable to do, despite going to the other side of the universe and taking pictures of Pluto. But never mind, that's just me. So yeah, Tesla, little bit of a rally. I think the stocks will still have a better week this week. A little bit of a rally here after a period. And as I said, I'm positioned for bear, so I might close some puts out. I might need to do a little bit of thinking, because I took long puts and calls through to 2024, and I put them on, in 2021, the maximum time period. And if it starts to rally now and we go into a recession, I think certain stocks go down, the smaller growth ones. But People have been pricing continually a Fed pivot. And I do
Yeah.
still think they will hold us for more pain this time because they need a great leveling. So if they kill crypto or all the wealth in crypto and regulate Bitcoin or marginalize it and terminate stable coins, which will be obvious competition, and flatten everybody, chase for security law, like it seems they might already be doing everybody else, and wipe out most of the alts, unless they're playing the game, going to World Economic Forum and all of the guys. If they do that, it makes sense that they do some damage on the stock market at some point as well. The whole game is if you have wealth, you can buy yourself choices. When you're bringing in a technological, oligarchical surveillance finance system, you don't want people with choices. There's a great leveling and a great flattening. And you go look through the history of Bolshevism in Russia. They were actually very diligent, Germanic, moved to Russia, farmers that were totally self-reliant and very good. They weaponized the civilians to go burn them. They raped the woman. They murdered and hung. They took all the priests and the nurses who actually had some wealth and prestige in the community. They tortured them, and that's how they leveled them out. And it's the same lineage that are perpetuating this next leveling. And you're seeing it with the mosquito bites and the mosquito bite reactions that we're getting.
If you want any confirmation of that, we could probably find that picture of in Klaus Schwab's office with a statue of Lenin behind him.
Yes, absolutely.
But we
they're all you're looking at.
Yeah.
And Lenin is absolutely Stalin, Lenin. They all came from Georgia. They were all Bolsheviks. They all had the same ethnicity, and they all perpetuated violent torture and crimes.
We're on the same page there.
And many things that are visited on Russians, including the Polish soldiers that were killed allegedly by Russians, were often done by this sect within Russia and are visited on Russians. Actually, all of those guys were Georgians. I've been to the house where Stalin was born. It's still saved. I've seen the museum that's right there in his grim little town in Georgia. I saw the crimes and the robbery of Tbilisi that they did. So I have more than a passing interest. I won't say I'm the chief historian on all elements, but I have more than a bluffer's level guide for what went on. And these guys are still here. Anyway, so back to, from that rather dark topic. So there is a possibility that actually Bitcoin can get a little bit of a bid, and crypto could get a little bit of a bid, and dollar could be sustained weak, and in actual fact, equity could get a little bit of bid. So how long will this be? Typically, when you make a target on a big HVF, we get a sustained period of pullback, and it can be quite large. People forget that we had the exact same with gold. We did gold against the euro and the GBP, and we warned people after gold traded 2,000 on the dollar. We had the gold pound and gold euro highs, and we got a final wind up, and literally not to Richard's Hart standards, but to our standards, we called the top because we got a little booster pattern with it, and within a dollar we got the tops of gold in terms of euros and pounds, which was the main driver behind our call. The dollar had almost danced to its own tune, and I will show you that. And then you can also see at your leisure how lengthy the problem was that followed, the delay. Let's start with gold pound, in fact. So you have a big UK audience.
Okay.
This was that big move that we were called pound long, gold pound long, 986. All the way up to the original macro target of 1510. We got a little wind up, and that gave us the target that literally gave us the top of that wick, 1576. That was back in August 20. That was the gold long whilst the oil collapsed, short trade that you could have taken on the commodity. And that was the sell-off in gold during the March 19. Actually, that was here. Sorry. March over here. It wasn't even that bad. You can see it was actually worse in 19 on the repo problems than it was here. You sold off, you went back up. You went all the way up to there. And actually, since that target was made, and then that smaller patterns target made, you had a descending triangle. So we'll show it to you in technical terms. you had this descending triangle, you broke, you sold off, you had a little attempt, we made an inverted HVF on the way down, 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 down. You then bottomed for ages with a minor grind, and you've only just come back up, and you've only once touched that previous high. In fact, twice. Call it a double top touch there. And you've sold off in both occasions. So that was when you got out, and you've been down and sideways for most of that time, only coming to the same point. That's the value of HVF. That's a carry cost to every trade. It's about getting in just before it goes up and getting out when it gets to a localized high. That's the value of true targets. And actually, you're still sitting pretty close to that descending triangle base now and trying to hold it. And we've got to work out what you're doing here on the pounds, gold versus the pound. And I still think we can have a paper price dip on gold. But whilst the dollar weakens, actually, it might get a bid as well. This was very similar for the euro. There's the final upside HVF that got us out there on the euro at the same time, August 20. That was the whole period we were biased long there. You got in the euro 1140. You got out 1700. So 1100 to 1700. It's a great move for gold moves. And then you were down, 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 sideways, sideways. Now, because the euro has been so weak, you have actually once gone higher. But actually right now, today, you're still lower than that target. So if you'd applied HVF method, you would have got out more than 2 years ago, 2 years and 3 months ago at a price higher than it is today. You would have got out at 1733. There's the number in purple right there. And it is today 1683. You would have 50 euros more and 2 years and a couple of months of capital doing something else productive, apart from going sideways and paying carry cost to a broker.
Yep, the opportunity cost is massive on that, for 2 years for that sort of a gain. Yeah, absolutely. So do you envision something similar to this taking place with the dollar?
What brought me to these gold markets to highlight this is that the dollar index could do something this long for an extended period. I haven't come to this chart in a while. You can see this line hasn't been moved, because we've since traded flat. It's more like that now. So you could going back to the Dixie, you could do something similar before you make a new high. And you could squeeze higher in a rising wedge, which is a monster for most retail people to trade. Because the minute that makes a new high, they all get bullish, and it's just in time to go somewhat higher and then get a major pullback. So it's one of the trickiest things. You squeeze higher because everybody now understands the game. Oh, we've got to get back in the dollar. The minute there's a dip, they come up underneath the price, just like they have done on gold against the euro. They come up underneath the prices, but then there's less buying power to push it into the new high because they're buying up the lows. So that's smarter buying. And you want to be the smarter money buying up the lows. You don't want to be the guy chasing in on a new high, which is why technical analysis always says it's bullish when you make a new high. And I say, no, it's not a good entry. It doesn't matter. It's not a trade. It doesn't matter. It's how much do you make a new high, by how much and how long. So that's a key point. So going back to that Dixie, you could have look at the time period. It's 2 years and you're lower on both charts. Now, I ain't saying that it's going to be 2 years. I think they're in a hurry to do their reset, but it could be. I'm not saying it isn't either. Anything is possible. So the dollar is going to have a rest, and the markets, the equity markets can go up and down inside a range quite broad, because it's had quite a big pullback. The Nasdaq had a big pullback. If you have a look at that. By the way, all our head and shoulders we called technically made targets. I think this one is the only one that's missed it by a cent, maybe. If it has, I would have to check the jaw, which were the things we highlighted when David Hunter was saying 60% in 4 to 6 months. They've gone down, and they've made targets. The Dow made its head and shoulder target just as we drew, boom, done. Since rallied immensely. This has got earnings and non-growth companies. So it's the traditional cash cows done far better, but it made its head and shoulders to the bear side when he was saying buy it for 60% upside up here. So too early. Same with the SPY. Again, down, not as high as let's do 3 days, not as high as the Dow. but also recovering potentially. Also made its head and shoulders, either there or there on a down leg. And those were both complex head and shoulders. But generally, when you get a head and shoulder, it doesn't mean it's necessarily over when you've run a target, but you do get pushback rallies. And you've already seen evidence of that. So if we take this as the final run, we want a proper break, we will ignore that. Look at that rally all the way to neckline after. But that doesn't mean it's a bull because it was a target make. It just means a lot of chop. You've gone lower. Now you're in a bit of a rising wedge. We'll see. But if the dollar stays weak, you could get some of the support for these risk assets.
Yep.
And that's something, as I say, people need to
watch.
Potentially bear in mind. Yeah.
Absolutely.
And that will reinflate and put a bid under Bitcoin for a while, potentially, and even other alts. But any more contagion and a problem. And any attempt to go live with their central bank digital tokens or to do what they did with FTX on a number of banks, as I say, bit of a run on deposits in Credit Suisse. If Credit Suisse goes bang and they don't support it, all the banks go bang. It's a Lehman moment. They've got to bail. They let Lehman go, but they couldn't let, they let Bear Stearns go, but they had to backstop everybody